Hello.
Yeah, hi. I am not able to start my video over here. This is MG here from Antony West.
Yes, sir.
And also your audio is very low. I mean,
Yes, I'll.
uh,
1 second.
yeah, it's better. This is better. This is better.
Yes.
Sure. So, who will be the co-host for this, or should I share my presentation with you? It's the Q3
Uh,
presentation only,
yeah. So
or can
actually,
I just play it myself?
I've made you the co-host in the meeting. You will be able to share the screen yourself.
Okay. So, should I log out of this and log in again?
So are you not able to see the share screen
Hello.
option? Hello.
I can see. I can. Okay, I can see it. Just give
Yes,
me a
sir.
second. Let me see if I can
Okay.
upload.
Yeah. Yeah. So good morning, everyone, and welcome to the Bharat Connect Conference 2024. Today we have with us the management of Antony Waste Handling Cell Limited. We have from the management the group CFO, Mr. Subramanian. The duration of this session will be around 60 minutes. I would request Mr. Subramanian to talk about the company for about 15 to 20 minutes, post which we can have we can open the floor for Q&A session. Participants who wish to ask a question may please raise the hand or can put them in the chat box. Uh, so we can start with the meeting whenever you are ready.
Sure. Just wanted to check whether A, the audio is clear, and second, whether you can see the screen. I'll just put in the PPT on board.
Yes, sir. We can see the audio. We can hear you and we can see the PPT as well.
Perfect. Great.
Yeah.
So, good morning, guys. Really appreciate this being the long weekend and people are still logging in. So, pretty good. 55 people over here. So, it's pretty nice. So, to start with, Anthony Waste is India's largest municipal solid waste focused company. We are across the spectrum. We have been in this business for more than 2 decades. Since the evolution of municipal solid waste being privatized in the Indian scenario. So we have been working with various urban local body. In particular, over the last 9 months, we have knocked around 680 odd crores of revenue with 160 odd crores of EBITDA and 70 crore of PAT. We have been in the circular business for the last decade, when we are ensuring that the waste that is being generated in various cities gets handled in a very professional and a scientific manner. We have operated in more than 23 different cities and urban local bodies over the last 2 decades. Currently, we are present in around 9 various municipalities. We execute around 16 plus projects in these areas, and these are like a long-term projects. We have around a fleet of around 2,260 odd specialized vehicles, all owned by us or operating under our own control. We have an employee base of around 10,273 people, and these are all the people who are actually the Swachh Bharata warriors to our credit. And these are the people who do the early morning rounds of picking up the garbage, transporting it, processing it, and seeing to it that the landfill is efficiently operated. Uh, in India, the potential is very high. I mean, I don't need to tell that anybody who gets up in the morning sees a pile of garbage all over the place. From the point of view leaving your house to the point of view reaching your office, you will see garbage all over. The problem that we are facing is an unending one, and the corporations and the cities are doing their best of kind of helping this being privatized by getting compactors and efficient handling of waste being done and getting that the same processed. Uh, Anthony is present, as I mentioned, across the spectrum. We not only do collection and transportation of municipal solid waste, we are also in the business of processing of the waste. We have been in this business since 2000 onwards. We have operations in the MR, NCR region, and also in central parts of the country. We have a split of around 60% of our revenue coming from collection and transportation, and 40% of our split coming from waste processing. The plan of the management is to kind of skew this to a 40-60 ratio from an existing 60-40 ratio over the next 4 to 5 years. When we talk about municipal solid waste, we are predominantly talking about waste that is generated from households, restaurants, industrial units like commercial establishments, and also we are into the business of construction and demolition waste processing. We recently bagged a contract from the city of Bombay for managing 50% of the western suburbs. Oh, sorry, 50% of the city, which is the western suburbs of the city, will be handled by us.
Hello. So I think there is some network issues from your end.
As I mentioned, been in this business in the industry with the regulatory.
Hello.
Right. So did you guys lose me out completely?
Yeah, so actually, we lost you in the last 1 or 2 minutes, and we cannot even see the screen right now.
This is back now. Sorry.
Uh, yes, sir. Yes, it is back.
Okay, sorry. So let me just jump to certain parts. This is done. So I was mentioning that we are in the entire spectrum of municipal solid waste, right from the point of primary collection, secondary collection, which is from the transfer stations, and also to the end point of the processing and disposal of the waste in a scientific manner. We and This is our milestone. We got listed recently, a couple of years back. We had private equity investments since 2000. I would say 2007 onwards. Elliott had been the private equity investor, which has kind of helped us in kind of streamlining the processes, financial accuracy, and the financial discipline that is reflected in our numbers even today. The board is constituted predominantly of independent directors and promoter directors. It's a 50-50 split for us currently. All our committees are headed by independent directors. Um our core strength is something that we have believed that we have built organically. The history of Antony has been into bus bodybuilding and vehicle coach building. We also manufacture compactors. We also manufacture aircraft refuelers and fire engines. That's the background of Antony Group. We have been in this business since 1960s. In 2000, we started exploring to the waste management business, and that's how Antony Waste Management was incorporated. So it's a strong background for us where we talk about make vehicles, we talk about maintenance, and we talk about running those vehicles consistently and efficiently over the project life. Um, Again, this is a split that we are talking about, and this will improve going forward with processing contributing a larger share over the next 3 to 4 years for us. Revenue for us, we always look at core revenue, not the consolidated revenue. Core revenue is what we normally refer as the tipping fee into the rate per ton. That has been consistently growing at a significant 15 to 20% CAGR growth, and that is something that we believe can be sustained, and that is what we are targeting internally as well. An 18 to 22% growth on of core operating revenue is something that we can achieve based on our underlying projects and the projects in the pipeline that we have bid for. These projects are normally long-term tenure. They have a project life of around 7 to 10 years in the collection and transportation. So it gives us a decently large bit of visibility in our numbers. Currently, our order book is around 11,000 crores, which can be executed over the next 7 to 10 years time. And some of them also going all the way up to 2045, which is our waste energy project. So it gives us decent amount of revenue visibility, and the cost controls are always in place. Escalation is something which is inbuilt in the tender, which kind of protects our margin to some extent. This slide gives you a range of activities that we do across the cities that we operate in. We are mainly into MMR and NCR region. I mean, we are skewed towards credit worthy and credit profiled entities. So we prefer to work with clients who can and pay us on time. So we prefer those kind of clients. Certain clients, the capex has been funded by them, so we don't mind taking a hedged position in those kind of projects. Based on our work, this is what we deliver to our client. We have been consistently promising and delivering a very good ranking to the clients of us, which is one of the referral points for new businesses for waste management in the country. So consistently, we have been working hard, and this is one of the key reason why Anthony stands among the top three preferred players in the country today. Uh, I mean, let's talk about Kanjur. I mean, this is like one of the long-term projects for us, ends in 2036, 2037. We process approximately 90% of the entire waste of the city of Bombay. We handle around 5,800 tons of waste a day. We are able to recycle approximately 70% of the entire waste of the city of Bombay, either through compost, RDF, or recyclable. So that is something very good. And that is something that we are working and we have been very proud to showcase to the country. We have also set up Maharashtra's first waste to energy plant. It's a green waste plant wherein the entire waste, power from the waste would be used by the corporation, reducing the own power bill and also achieving a very good environmental impact by ensuring that the methane and gas emissions from an open landfill gets captured and gets converted into green energy. So this plant got commercially active from 7th of October 2023, and the first quarter of full form performance would be seen in Q4 of the current year. So that is something that we are looking forward to. The plant load factor swings for us currently anywhere between 85 to 89%, which is very good given the start and the fact that it's a waste to energy and unproven technology in India, but a proven technology across the world. And Hitachi Zosen is our technology partner over here. Very happy with the decision of going with a partner. I'm very happy with the performance till date. Uh, these are all our assets. We have actually built most of this. We actually know how these things work, and this is why our operating margins and our operating leverages helps us. Your electric vehicles, your compactors, your dumpers, everything from the back end because of our parental as a project like the board and the promoters strategy is something that we can always talk about. And yes, I mean this is a slide that nobody can avoid. I mean, we are ESG. We don't talk about ESG as an aspirational thing. This is what we do day in, day out. We are able to work on all the three parameters consistently, effectively on a day-to-day basis, 24 by 7 and 365 days. This is what we are today. These are numbers that we have started tracking because a lot of investors are kind of uh, uh, cued on to what are we actually delivering. So we have started capturing our scope 1, scope 2, and scope 3 emission norms that is getting disclosed efficiently, effectively. The financial highlights are something that is there in the public domain, so I will not drag you into those numbers now. And I'm happy to take on any Q&A that you guys might have.
Sure, sir. So we can start with the Q&A session.
Yeah, please.
Yeah. Any participants who wishes to ask a question may please raise the hand or can put the question in the chat box. Yeah. So we'll take
Yeah,
the
so
first. We'll take
the,
the first question from the chat box.
yeah.
So it is, what happens to Mumbai contract once it expires? What are the modality of rebidding?
So the Mumbai contract expires in 2036, 2037, and once the contract is over, we technically have another 7 years to operate the site to make the site as good as it was previously. So technically, we have that site in our works till 2042. Once any contract is over, not just Bombay, but let it be any other site, the contract has to be rebid by the corporation. So there's a rebidding process, and that seems to work with the norms. So after the contract is over, it goes for a rebidding where you are one of the eligible bidders based on a technical qualification.
Got it, sir. We'll take the next question from Mr. Rohan Gupta. Yes, sir, please go ahead.
Yeah, am I audible?
Yep.
Yes.
Right. So, sir, a few questions. Firstly, wanted to gain an understanding on this plans around the vehicle and tire recycling. We had earlier mentioned that we have some plans around setting a plant for this.
Yep.
So what would be the capacity? Has the land been acquired? What is the status? When would be the commercial start date? What would be the revenue potential, etc.?
Okay, on the auto and tire recycling, we have already started talking to two large OEMs to kind of work with them in this business. So we have already identified pockets of land in the state of Karnataka. So we will be starting from Karnataka and then we'll be branching it out to other cities. The capex requirement will not be large. It will be less than 20 odd crores. The size of the project can be ramped up. We are looking at a very modular kind of a system wherein based on the business, based on the demand that we see, we can scale it up in a span of 3 to 6 months. So we are looking at a very modular kind of a growth. So this is something new for Anthony. So we don't want to start with a very large scale where the variables are not known to us. And though it's a new industry for India, has been an established industry globally, but the way Indians work is very different from the way the other countries operate. So we would like to start from Karnataka in a modular fashion. So capex will be less than 20 crores, and this will be scaled up based on how the business traction grows. Initially, for the first couple of years, this will not be a significant contributor to our revenue and EBITDA. We will be looking at not less than 8% or 2% of the revenue coming from these projects, but they will definitely be able to scale up once we are able to understand the dynamics of this industry.
Okay, understood. Okay. So then the next was on this biomining thing as well. Even in the presentation you have presented, there is a huge potential, as I understand, for biomining. So what is our plan going forward in this area?
So we have already completed one biomining project in Greater Noida, wherein we cleared around 2.4 lakh tons of legacy waste and gave over 19 acres of land back to the corporation. Similarly, we have recently bagged a biomining contract from SIDCO. This is larger. This is around 8.5 lakh tons of legacy waste which needs to be biomined in around 2 years' time. It's a revenue potential of around 77 crores. So we know the business. We have successfully completed one project in the time period that we have got to do it. We know the logistical issues of disposal of waste and how to treat those disposal of waste. So we have done that successfully, and those learning curves have helped us bag the second contract in Sidco. So, I mean, we are definitely going to bid for more of biomining contracts as and when they come up from uh, good clients.
Okay, so this is only a second contract, but what is like the execution timeline, and how much, what is our bidding eligibility for these contracts?
The bidding eligibility are very similar to what any waste processing contracts are. You need to have processed X number of tons of waste historically. So, based on our Kanjur and waste to energy projects and the biomining activity that we do in Kanjur, we are easily qualifying almost all the contracts that is coming up in the country. So, on the technical qualification, this is something that we have already cleared one step. And on your second part, I think this can be scaled up based on the requirements of the corporation. So, understand the corporation comes out with a tender requirement and says specifically what they want to do and the time frame that they give us. We need to be very judicious there because there is a significant amount of pressure in large number of tier one and tier two cities to get rid of the mountains of garbage which has been there for the last 2, 3, 4 decades. Now, these things cannot be vacated in a day or in a 6 months time because of various reasons. I mean, you have to consider monsoon, which is very heavy in the western parts of the country as compared to the central and in the northern parts. So we need to account for the time of monsoon where the activity almost grinds to a near halt, and also the disposal of the waste. I mean, there is soil, there is particles, then there is aggregates, and there is RDFL material. So we need to plan for the disposal in a very scientific manner. You can't just bid based on a price which is eligible for Greater Noida. The same price may not work in other parts of the country.
Okay, but at the moment, like, what is the expectation from government? Like, how many bids are they bringing? How many tenders are they opening in this field? And what is our competition like? How much would we expect to win out of these?
If we were to look at
like an approximate
tendertiger.com,
ticket size?
so we would be looking at least two or three more biomining contracts over the next 2 3 years time. I mean, looking at the size of the contract that's coming up, we will definitely be bidding, but we will not be swinging at all the tenders that we want. We will be very selective in our tender selection. So I would say we would be continuing to look for biomining contracts, but this is just another part of our projects where we can try and utilize our assets in a more
Okay,
judicious
and the
manner.
timeline for these would be 2 3 years, or
Yeah, these are short-term contracts. So these are basically like in any EPC contract where you get in, get the work done, and get out. So they are normally
okay.
less than 3 year schedules.
Okay. Okay, so just now a couple of questions on the financials. So one is in Q3 there is a higher interest and depreciation. So would it be same going forward? Because our PAT
Yes,
was quite impacted.
yes. So the reason for the spike in interest and depreciation is because this was a quarter where we commercially started our operations of the waste to energy project. Now we started the
Yes.
project on October 7th. Of course, the PLF and everything was graded gradually. So the effective revenue contribution was not getting recognized over here, but the interest and depreciation started getting passed on to my income statement. So on an annualized basis, 17 crores would be my interest, incremental interest cost, and 13 crores would be my incremental depreciation cost due to the waste to energy project coming uh, into line.
Okay, 17 and 13. And I understand that there would be 60 65 crore of revenue potential, right, from this?
Yes, on a fully annualized steady state of affairs at 85% PLF, we will be looking at around 60 to 65 crores of revenue.
Okay, and how much would be the EBITDA on this?
This will be higher, and I don't think we normally comment on segment wise or site specific EBITDA. Sorry about that.
O- Okay, not a problem. Then second thing was on the trade receivables. Are we facing any bad debts from the municipals and for either the escalation claims or any of the receivables from them?
There has never been a case of bad debts with receivables from municipal corporations. There has always been a slight delay in the resolution, and that has been confirmed every quarterly. So every quarter there is a confirmation from our clients saying that they owe us so much money. So there has never been a case of bad debts coming into the books of accounts. There is always a credential, prudent provisioning that we keep on doing because of the time lags. This is the first time on the last 2 decades that we have seen that the bulk of our municipal corporations don't have elected members. So the decision-making authority has gone for a toss, and that is likely to be remedied over the next couple of quarters. So one of the corporations already done that. The other two corporations are in the process of getting that streamlined.
Okay, but we expect to receive everything, right? I mean, from
Yeah,
this,
yeah.
there won't.
So there's never been a bad debt receivable from an essential service providers in the waste management business across the country.
Okay,
There is a delay
okay,
in receipt, but there's never been a bad debt.
okay. And last question was on this. So around I think 1 or 1.5 year back, there was an IT raid or something.
Yeah.
Can you provide an update on that and what exactly that was?
So the income tax rate was certain expenses were paid to our vendors, and the vendors had failed to file their returns. So these expenses were being called up. So despite the TDS being deducted, the counterparty was not filing their returns. So those expenses were being kind of disallowed by the corporation, by the income tax authority. So that was the crux of the matter. So based on the queries and the list of questions that they have asked, we provided all the details. We have also given the ledger copies of all the vendors with their PAN numbers and GST filings and everything. So the bottom line was expenses which have been paid entirely through RTGS or NEFTs or through checks. I mean, let me give you an example. If you have a company and you're having an AMC of a computer service provider, now he provides you a bill. He provides you a tax invoice. You deduct the 10% TDS, pay the TDS to the income tax authority, pay the 90% to the vendor. That's where your responsibility stops technically. But
Yes.
if that vendor doesn't file his return, the income tax authority is now asking us, "Ki, boss, this guy has not filed his return, so these expenses are bogus." It's as simple as that. And so, I mean, now I have to find that guy, make him file his returns or ensure that his ITR returns are there and provide it to the income tax authority. That's what
Okay,
I'm
so
doing. I mean,
are we expecting like maybe this would have been for one assessment year? Do we see that affecting us significantly? Maybe the IT AO might
No.
say कि, open all the previous files as well, and how much could be the potential liability?
So the potential liability, and for example, to give you a sense, the total liability for 1 year was around 12 lakhs, which we paid off under duress. So that is the impact that we're talking about. Even if they were to open the assessment from 2015, 16, 2022, 23, the impact is not going to be significant because all the
Okay,
payments have been
okay.
made. It's through, we have all the payment records, the bank statements, everything is clear from our point of view. We need to justify these are genuine expenses, which given the profitability of the company vis-a-vis its competitors is pretty much in line. So this matter will definitely go to the tribunal where we need to argue on these matters. And historically, there has been precedents that these kind of arguments get passed through the tribunal only.
Okay, understood. And so last question, we had given a guidance of 20 to 25% for FY25.
Hmm.
What are we on? Would are we on track to achieve that for 25? And what exactly, from where is this growth coming?
So just to clarify, we always talk about core revenue growth. We don't talk about reported revenue growth. So when
Yes,
we
yes,
talk
yes.
about the core revenue growth, yes, these are the numbers that's already in line based on contracts that we have backed and executed. The contributors would be our existing organic growth. Second will be your full year's revenue recognition from the waste to energy project. The full year's revenue recognition coming from our C&D contract, which is likely to start from the Q1 of the next year, and the Panvel and the Nasik project contributing to the growth. So on a apples to apple comparison, based on these contracts, we are confident of reporting these numbers.
Okay. Okay, so that was it from my side. Thank you so much.
Sure. Welcome.
Yeah. Thank you, sir. We'll take the next question from Miss Sindhu. Ma'am, please go ahead.
My question is that at present you're predominantly concentrated in the areas of Mumbai. Further going, are there any chances to expand into other geographies?
Yes, so I mean, we are definitely exploring other parts of the geography, but we will not. Uh, so the reason we don't expand to other parts of the country is not because we are bored of Western region. We would like to work with clients who have money to pay us. So I mean, there are other corporations that we are looking at. They are in other parts of the country, like we are trying to work in Chennai, we are trying to work in Orissa and other places, but we are very selective in the kind of clients that we work with. MMR and NCR continue to be a 60 to 70% of our revenue chunk. We have started exploring other cities, the tier two cities like Nasik, Nagpur, Varanasi, Jhansi, where we have a good traction. So we are very selective in our increasing our geographical footprint.
Okay, thank you.
Yes. So we'll take the next question from the chat box.
Yeah.
Uh, the question is from Mr. Jugal. Update on the land allotted in Dahisar to the company.
So the land has already been got for a 20-year period. So it's on lease for us for the entire project. So that is already done and dusted. The civil work is already going on. The approach road is being readied by the BMC. So we expect that work to be completed by the second week of April, and the project should be ongoing from there. Hello.
Sorry. So we'll take the next question from Mr. Anupam Jain. Yeah, so please go ahead.
Yeah, thank you for the opportunity, sir. One thing that I wanted to understand was you were saying that there was no bad debt, but in FY20 there was a settlement from municipal corporation. So there was
So
a
that was
settlement.
that was not a bad day. It was more of an arbitration where we had claimed that they have. So when there is a dispute as per the tender condition, you need to go for an arbitration. It was not a bad debt. We got a significantly higher chunk of money than what was recognized in the books of accounts. So it's not
Sorry,
a
sorry,
bad
sorry
debt.
to interrupt. Your voice was breaking, sir. Couldn't hear you.
Okay. So that was an arbitration settlement because of a dispute arising from a tender condition. The tender clearly said that we need to collect the waste and transport the waste. There was no talks about we segregating the waste. So the corporation had deducted some money, which was disputed, which we went for arbitration, and the arbitration was settled in our favor. So it was not a case of bad debts.
But we had a loss of 12 crores, right?
No, that was a
We
provision that
said
we had taken. We had
we
made a
did,
provision for that.
we made a provision for 18 crore and we settled for
Yes.
9 crores.
No, so that is the MCGM contract. So based on the confirmations that we got, so it's not a single contract over here. So when we started going public, we took a call to kind of clean up all the old receivables over a period of time. So that was the reason why you see a significant spike in provisioning being done in 2020.
And why the same thing can't be repeated? Why there cannot be another arbitration
Because
per
these
se?
are old contracts where the tender wordings are very vague. So going forward, after that, most of the clients that we work with, we have ensured that the tender wordings is clear and transparent, and the concerns are raised in the pre-bid queries. So we have, since 2018, all the contracts that we work with has been very clear in the rules, what is expected of the client and the role that is expected from the service provider. So if there is any gray area of doubt where penalties can be levied, that gets answered through the pre-bid meeting, and most of the tenders also cap the penalty to a percentage of the contract value. So those are the two big learnings for the industry, not just for Antony, for the industry over the last couple of years. So the
Okay,
dispute normally arises when the tender conditions change during the tender life, which is not acceptable.
got it. So the contracts are much more better.
Robust.
I would think
They are
robust,
better.
better.
Better constructed. They are better documented and better. I would say authored.
Legally termed everything is
Yes.
tight,
Yes.
kept like okay, got
Exactly.
it. A
Exactly.
second question is basically you said that your interest cost would increase 17 crore annually and depreciation cost would increase 13 crore annually. Was that right?
Annually from the waste to energy project and 13 crores from the same project, since the same has been put to use.
So on a 60 crore, you're paying interest of 17 crore, 65
Yeah.
crore based energy.
Yeah.
So
So to give you a background, in
yes,
infrastructure company, there's always a risk of execution, especially with government contracts. So when you go
okay,
to a lender asking for money, so they will always take a pound of flesh, which is significantly higher. To put things into perspective, when we started Kanjurmarg project, the cost of borrowing for the company was a whopping 14%. Today, the same cost is down at 8.75%. So there is a significant premium that is charged to waste management companies due to the execution risk. So once the project is executed, the same gets refinanced at a lower rate once the cash flow starts coming. Similarly, we
currently
see
it
the
is at
same.
14,
It's a
15% currently this project
no
also.
for
Waste to
PCMC waste to
energy,
energy. The current cost of
yeah,
energy, current cost of debt is around 10.25%.
10.25%.
So this will
So
again get reset after
kept
2 years of operations.
reset after 2 years. And this cost is almost, so you're setting up almost 170 crores of capex.
It's around 320 crores of capex, which includes 50 crore of capital grant. So the effective capex will be around 270 crores.
270.
170 is your debt. The balance is equity contribution.
Okay. Thank you. Thank you for that.
Thank you, sir. So we'll take the next question from the chat box. So this question is from Mr. Kirti. So a change in government will affect our business?
No, a change in government doesn't change our business or the tendering. Once a tender is issued, it's like a contract signed for 7 to 10 years. The only way it can hit us is if you don't satisfy the tender conditions during the process of the tenure of the project life. So change in government doesn't have any impact on our business.
Got it, sir. Yeah. Sir, the next question is from Mr. Pranav Gala. Sir, do we see any opportunity in the solar waste?
So we have actually mandated one of the large consulting firm to find out areas where Anthony can get into uh, downward recycling kind of a business. So they had spoken about solar, they had spoken about battery, and we had also looked at other e-waste recycling and auto and tire recycling. Based on the synergies that we have seen internally, I mean, we believe the low-hanging fruits to be auto and tire recycling. Solar and battery recycling is something which is very different, very non-linear to our kind of businesses. So we would not be today getting into solar recycling, uh, given the priority of we focusing on MSW and auto and tire recycling. But it's something that we don't rule out, but not for today, maybe 5, 7 years down the line when the industry is more stabilized.
Got it, sir. Uh, um, yeah, so the next question is from the chat box. Why has it been difficult to get contracts from South India like the states Karnataka, Tamil Nadu, or Kerala? And is it because of the payment issues?
Actually, I mean, we already have one contract, I mean, in Mangalore, which is in Karnataka, and I mean, it would not be because since we went public since 2018 onwards, our hands have been full. We have been bagging contracts in the areas that we have very large amount of exposure, where the corporate overheads can be leveraged significantly. So we bagged contracts in Nasik, Nagpur, Pimpri, Varanasi, Noida, Greater Noida, and Jhansi. South, we are exploring. We have to be very watchful about the kind of contracts that we want to look for. The kind of contracts which have been coming up for bidding, like the one in Davangere, Hubli, Belgaum, have been for biomining, and there were serious operational concerns, and that's why we did not bid in these cities. We are definitely looking at Tamil Nadu. We are definitely looking at Andhra Pradesh. There are few contracts which is come up where we are actively working with these two states.
So we'll take the next question from Mr. Shubham. Yeah, so please go ahead.
Hello, am I audible?
Yes.
Yes.
So I have few questions. The first one is regarding vehicle and tire recycling segment. So by
Yes.
when do we expect to start this project, and what would be the margin profile for this segment? Would it be a margin accretive business for us, or will it be in line with the current business?
So to start with the first question, we would expect something concrete to happen before the end of the current next financial year for sure, because we already done a groundwork. We will definitely be initiating work on that. So maybe the last quarter of the current year, that is for FY25, or first quarter of the next following year, we would have definitely having some commercial activity in this site. The margin profile, Anthony doesn't believe in doing things at a loss. I mean, we will definitely be doing assigning some work where the margins will be positive. It will be accretive. Will the profile of margin be similar to our line of business? It's too early to tell because the variables are very different from waste management that we work in. In MSW, there is an assured revenue in the form of tipping fee. For every ton of waste that I handle, I get paid. So, and any byproduct I sell, that's an additional incremental business. In case of tire recycling and auto recycling, not only do you have to buy the raw material, you also need to find a market for the byproducts. Now, the selling price of the byproduct is very variable depending on market conditions. So, it will be very I mean, it's actually out there till the time we start a small modular function of a waste processing and see how that works out to be in a position to comment on the margin profile. But it will definitely be positive. It will not be negative. That's for sure.
Got it. And so you guided for 20 to 25% core revenue growth. So if you can elaborate, what do you mean by this core revenue growth?
So if you look at my total revenue stream, you also have something called the project revenue, which is my index as accounting treatment because of the capital. When we talk about core revenue, we are talking about
So we are losing you in between.
waste handled by the company in
Hello?
the rate
Hello.
So we are having some network issues.
That the
We are not
client
able
faces.
to.
That is what I mean.
So we lost you in the middle. There were some network
Okay, is
issues.
it clear now?
Yes, yes, it is clear now.
Okay. So we are talking about, sorry, you are asking about the margin profile of auto recycling and everything. So was that answer clear?
Yeah, that we got it. The only thing about core revenue growth you were explaining.
Yeah, the core revenue growth we talk about is our actual waste that we handle into the rate pattern that the client faces. So that is what we actually see coming into our bank accounts. So as we follow the Parda system in-house, for example, I mean, kitna aaya, kitna gaya. So we look at core revenue as our only model where we have to increase the revenue through increase in tipping fee and increase in volumes of tonnage of waste that we handle. So that is what we look at, and that is what is responsible for the growth and the costs associated with running the waste management business. So removing the accounting treatment related revenue, which is the contract revenue and the contract cost, we are talking about core revenue and core costs in our internal communication, and that is what we always guide for. Hello.
Hello. Yeah, Mr. Shubham,
Hello.
are
Yep.
you done? Can we move on to the next question?
I think Shubham dropped off.
So
Hello.
till that. Hello.
Shubham, we are not able to hear you.
Yeah.
Hello, can you hear me now?
Yeah, we can hear you.
Okay, sir. So just one last question. I missed your comments on how you will be achieving that 20 to 25% revenue growth. If you
We
can
can
just
hear you.
briefly
Yeah.
touch upon that.
Okay. So that is purely based on my waste to energy project coming on stream and the 12 months of revenue coming in FY25, plus my construction and debris processing contracts also coming in the current year. Full year's revenue from Panvel and Nasik also contributing to the top line. So these are the four new contributors of contracts that we have bagged in the current year, which will reflect in my next forthcoming couple of years. Add to that, the revenue from the Sidco biomining project will also start coming into the next financial year, maybe for the second half of the year, but that also adds to the core revenue growth line for us. So all these are from my existing line of businesses. Any new project wins will further add revenue to the numbers.
Okay, sir. And so, what is our current debt position and what is the current cost of borrowing for us?
So our total debt today is around 368 crores as of December 2023, and our average cost of borrowing is around 9%. Weighted average cost of borrowing.
9%. Okay, got it, sir. Thank you so much.
Sure.
Yes, sir. So we'll take the next follow-up question from Mr. Anupam.
Yes, sir. Yes, sir. Yes, sir.
Thanks for the opportunity, sir. So, just getting back on the waste to energy project. Hello.
We
Hello.
can, we
Yeah.
can hear you. Please go ahead.
Yes. Yes. So, just for waste to energy project, you're saying you are going for 320 crores and effective cost would be, and you are saying 65 crores of sales for annually. This will be your annual team, or will this increase
Yeah.
from next year? What will be the revenue
Uh,
trajectory?
So the revenue tipping fee split would be like around. I have a tipping fee which is linked to the WPI component, which has an escalation based on WPI. So the incremental revenue from enhanced tipping fee is one. Second is from my sale of byproducts like compost and RDF can also add to my revenue line. So currently, when we talk about 65 crores, that's purely based on current tipping fee and the sale of power, assuming an 85% PLF. So the positives to the upside are inflation-related tipping fee increases, increased sale of byproducts, and improvement in my PLF.
Okay. So is there any capacity utilization also? Like, is there a
So the,
limit to this?
So the plant load factor really is capacity utilization because the plant is available for 14 megawatts, of which the effective units that can be sold after the auxiliary consumption is around 11.7 megawatts. So that is 100% utilization. So we are currently doing at 85% utilization. So any improvement towards the 100% will definitely add to higher top line.
Okay, so just want to understand what is the payback period here that would have any, because you're not giving any margins guidance, so any payback
We
period that you would
normally look
calculate?
at 7 to 8 years kind of a payback for the project on a cash basis. So I mean, that is what we would be looking at. So
Okay, 7 to 8 years.
that's on a base case assumption. So if things go, it can be shorter. If things we are not able to maintain the PLF, then it can go up to 9 to 10 years also. The project life is 21
So
years for us.
5 years, good case, 7 to 8 years, moderate, and 10 years, bad case. Got it, sir.
Yeah, yeah.
So another question is, what areas are you looking to expand specifically in a year or a half, 1.5 year that I can track?
Areas, I should talk about the activities or you're talking about geographical?
Geographies, as in like after election that you may bid for, because I think so most of your
So
debtors will
yeah,
also get you will get received after elections
right,
most probably.
right.
That is right understanding.
That's a right understanding. The geographies that we're looking at are metros. Currently, we are looking at Chennai. We are looking at parts of Delhi to explore, and we are also looking at the eastern board of the country, but nothing specific as of now. But Chennai and Delhi are two areas that we are sure that we would like to bid for because there are certain contracts which is coming up for bidding in these two areas over the next 6 to 12 months. So we are definitely eyeing those areas.
Okay. Uh, any guidance on the margin front, because it has been on a continuous decline. So what has been the course? Can you just make me understand the map line?
So, yep. So on the margin front, if you were to look at, you need to split this margin story into two components. Pre 2019, post 2019. Pre 2019, if you
Okay.
look at the margins of the company, they were already always been high, around
Yes,
24, 25% and above. And after
25% of
2000,
course.
yeah, and 2019 onwards, there has been steep decline going all the way to 14% on the reported front. You should also during this period look at the revenue split. There was pre 2019, it was only core revenues, which is my tipping fee into my rate per ton. Post 2019, when I started doing my capex at waste to energy, there was a significant contract revenue also coming into the revenue mix, which is a low margin business for us. So when we spent around 180 odd crores of capex in Pimpri and another 30 odd crores in Kanjurmarg, that had a significant mix and pressure on the margins. So from 2019 to 2023, you will see the most of my capex. Also during COVID, there was a delay in execution. So the entire revenue mix got twisted, more skewed towards project revenue, which is a low margin business, and versus my core revenue business. In 2024, after Q3, from Q3 onwards, my entire capex phase is done and dusted. So if you look at Q3 numbers, my EBITDA is significantly better than what it has been historically over the last 3 years. And that is mainly because my project revenue mix has become a shadow of what it was formerly because my capex is done. So going forward, we should be holding on to Q3 kind of a margins on a base case scenario. And on the upside, we can see escalation getting passed by various corporations can also come and elevate the margins in
So
the.
no, no. Our margins shall decline now because waste to energy product is anyhow a low margin from what I can get. Thing is, waste to energy is a low margin business.
Waste to energy is not a low EBITDA margin business, it's a high EBITDA margin business.
It's a high EBITDA margin business. Okay. Okay. So it will be upwards of 20%. That is what you're guiding for.
Yeah, it should be in the range of 22 to 23% for us for FY24. It should be in the same level or slightly better going forward.
Okay. And when you're talking about, let's say that 80 to 20% growth rate you will maintain for next 2 3 years. So it is essentially you're saying after 4 years your revenue will double.
Yes, because if you look
Once
at
that,
our If you look at our numbers when we were 2018, our turnover was core revenue. Let's again talk about core revenue. My revenue was 400 odd crores. And in 2023, my core revenue was 675 crores. So, I mean, we are actually giving that kind of numbers. So, and based on the contracts that we already bagged and the ones that are in the pipeline, we are confident of at least duplicating the same kind of growth numbers. And our base is not so large that we have a problem. The opportunities is good for us. Pricing discipline needs to be maintained for us. I mean, that is of paramount importance. If you look at margin profile, we like to look at projects which earn the same bang for the buck that we have earned historically. So we like to sustain those kind of margins.
Okay, got it. And these drivers will be mostly waste to energy, increase in PLI and newer geographies.
Yes. And of
Okay.
course, additional new projects.
Addition of new projects as in
As in
apart from
collection and transportation, biomining
yeah.
businesses, and maybe getting, I mean, if waste auto recycling or tire recycling really catches up, maybe that can be the next driver for growth for Antony Waste.
Okay. Okay. Thank you, sir. That will be all.
Sure.
Thank you. Thank you for the opportunity. All the best. Best of luck for you.
Thank you. Thank you.
Yeah. So due to time constraints, we'll just take the last question here. So this from the chat box. Are you flexible on selling the waste to other companies for making biogas?
I don't think we have any issues with that. We are actually talking to a couple of PSUs where they want to set up bio-CNG. We are just looking at the modalities and how to structure that. So we don't have a problem selling the waste to other companies for making bio-CNG or selling it to companies which wants to make steam from RDF or even selling RDF to cement companies, I mean, which is what we are doing. So we don't see an issue selling waste to other companies for making biogas. If they have a processing plant, I mean, we are happy to sell them the waste.
Got it, sir. Yeah, sir. Thank you, sir, for attending the session and giving such detailed answers to all the questions. I would also like to thank all the participants for joining in the session. So, if you have any closing remarks, then we can conclude the meeting.
Okay, actually, from the closing remarks, whenever I mean, the waste is a business that is non-cyclical. It's there. I mean, it's like going to a barber. Till the time you go bald, I mean, you need to have a business, and this business is going to be there. The growth is sustainable and it's doing well. India is still in the very first leg of growth in waste management. So the potential for growth for the waste management, not just for Antony, is very high. Modernization, higher utilization of technology, getting more automated ways of waste processing, and more importantly, segregation of waste at source. It's critical for the greener and cleaner economy for us. So, I mean, it's something that we have to do, and it's something that we are working on.
Great, sir. Yeah. Thank you, everyone.
Thank you, guys. Thank you. Have a long weekend. Bye.